So today I want to talk about, I want to talk about a couple of things. I want to talk about how much life insurance an individual should have. The easy answer is as much as you can get. Let me put some perspective on that or some context around it. So you're entitled to a certain amount of life insurance, and that amount is determined by it's a multiplier of your age and your income. So, obviously you cannot put a value on a human life. That's an impossibility, and everybody knows that, including the insurance companies. However, they have to, insurance is created to indemnify a loss, or an insurance payout indemnifies a loss. As an example, if you crash your car, the insurance company, if your car is worth $15,000, they're not going to hand you a $100,000 check to replace the car. You may have other damages that may result in a $100,000 payout, but to replace the car, they're going to pay you what it's worth, $15,000. Insurance, again, the payout of insurance is to indemnify or make whole, best they can, a loss, a financial loss. Same with a house. If you have a house and it happens to burn down, the insurance company will step in and they will make you whole or as close to whole as possible. That's what insurance is for. Life insurance is no different. And so they have to have some calculation. Again, they have to have some calculation to determine how much insurance you're entitled to, and so that they don't overinsure you. Because again, in the case of the car, if you have a $15,000 car, there's no reason to have $100,000 of coverage on it, not to replace it, because the car is just simply not worth it. So again, you cannot put a value on a human life. That's an impossibility. We all agree on that. So, in order to indemnify a financial loss, the insurance company has a multiplier that they come up with. They says, "Hey, we will indemnify up to a multiplier of your age and income." And the reason they do an age and income is because, in the beginning years of your life, you have typically a long lifespan. And so that multiplier of age and income is much larger than, let's say, a 60 or 70 years old, a 60 or 70-year old, where they have a much smaller time frame of working years before retirement. So a common multiplier would be 30x your annual gross income. So as an example, if your income is $100,000, you're entitled to $3 million of coverage. That's the amount of death benefit coverage that you can have or that you're entitled to. And if you're married, your spouse is also entitled to the same amount as the highest income earner of the two. So if one income earner is $100,000 annually and the other one is only $25,000 annually, they're both entitled to $3 million of coverage, or 30x the highest income earner. Now, that's how you determine how much you're entitled to. A recommendation, both from a professional standpoint and a personal standpoint, is max insure yourself. Get as much insurance coverage as you possibly can. Now, from a unfortunately, a lot of agents are trained and think in the way of needs analysis, meaning, hey, let's get you covered for what you need to pay off your home, what you need to pay off your other debts or student loans, or, well, student loans generally would go away anyway, but depending on the type of student loan. Anyway, what do you need to pay off your debts? What do you need to bury yourself and leave a little left over for the family? That's a needs analysis, and to me, that's extremely erroneous. I have one of those policies. That's what I originally had in 2010, which was my first life insurance policy. It was a term policy, and it was done based on a needs analysis. Now, after coming into the industry, the financial industry in 2012, as I've shared this before, that coming in and realizing what life insurance is and the true value of it, I come to realize that it should not be based on a needs analysis. It should be based on a wants analysis, meaning what do you want your family's lifestyle to look like if you're not there? Something happens to you and you're deceased, what do you want your family lifestyle to look like? So it's a wants analysis rather than a needs analysis. And that wants analysis, that 30 times multiplier isn't going to make anybody rich. In fact, if you look at that multiple, if for somebody making $100,000, that $3 million of death benefit is certainly not going to make anybody wealthy. Let's just hypothetically say that's a 30-year-old earning $100,000 annually, and they can get $3 million of coverage. That multiplier is simply $100,000 for the next 30 years. And that's not accounting for income increases, which you're going to have. You're not going to stay, if you're making $100,000 at 30 years old, you're not going to be making $100,000 at 50 years old or 60 years old. But realistically, that's the maximum amount you can get. So what that ensures is that your family lifestyle is at least maintained for the next 30 years, from the time you're 30 years old in this example to the time you're 60 years old with no income increases. So when people hear that big number, when they hear, oh, $3 million, and I've heard people, I was like, well, they're going to be wealthy if I die. I'm like, no, they're not. They're going to be able to maintain lifestyle for 30 years, up to 30 years, because that multiplier decreases the older you get. So, at some point, it's going to be 25x your income, and then 20x your income, and then 15, and then 10x your income. So that multiplier decreases as you age. Nobody's going to get rich off of it. So from a professional standpoint, max out your insurability and max it out while you can. And you can do that very, very inexpensively with term insurance. Let me back that phrase up. It's a low premium. The premium is, of course, what you pay for the insurance. Term insurance is a low premium for the amount of death benefit. Now, the reason I retracted the expense aspect of it, and I'll get into this in a different conversation, uh, term insurance actually can be a very expensive way to insure yourself. Now, as far as premium goes, it's a very low premium. However, typically speaking, you outlive term insurance. And so if you pay into a policy for 20 years and then you renew for another 20 years and then you renew for another 20 years, so you've got term insurance coverage for 60 years, but you outlive it all, then you walk away with nothing. Because term insurance, although it's a wonderful product, I own a lot of it and I sell a lot of it. It's a wonderful product, but ultimately, when you outlive that term or that time frame, the insurance company says, thank you, have a nice day. Okay. You've essentially rented coverage for that period of time. Now, again, it's a wonderful product. Highly recommend it. Uh, but just know that at the end of that time frame, you walk away with nothing. You don't get your money back. Where whole life, a tool like whole life, you actually build equity, and at the end of that 20-year time frame, you could walk away with 100% of your premiums that you've paid into it and more. You walk away with your cash value, which would be after 20 years, it would be greater than all the contributions that you had made. So as far as expensive, whole life is actually less expensive because you can walk away with 100% of your equity. Term insurance is a lower premium because the outlay is less for the same amount of coverage as a whole life policy. So anyway, again, I'll display that in a different conversation. For the purpose today, I said max out your insurance from a professional standpoint, max out your insurance policy. It does a couple of things. First of all, it ensures that your family's lifestyle is maintained even if you're not there. And second, it's like an ace in your back pocket because if you have a term insurance, and specifically a convertible term insurance, which means you can convert from a term to a whole life or to another product without proving insurability, then it acts like an ace in your back pocket because if your health does change, you can always whip that out and say, "Hey, I want to convert this term to a whole life, regardless of my health or health history." And the insurance company is happy to do that for you because it's in the contract. Okay. So, from a professional standpoint, I highly recommend maxing out your insurance. From a personal standpoint, I also highly recommend maxing out your insurance. Okay. So I told you that I have a policy that I had since 2010, and it happened to be based on a needs analysis, unfortunately. And, um, but thankfully, it was a convertible policy. Now, the needs analysis meant that I was already underinsured, meaning I hadn't maxed out my insurance. I hadn't taken advantage of all the insurance that I could get because again, I was sold based on a needs analysis. Okay. Nothing wrong with that agent or how they sold it. Uh, dear friend of mine still. However, the concept was, hey, buy enough to take care of these things, not understanding the full scope of it that I'm explaining here. So I had that policy in 2010. When I got into the industry in 2012, I had been having some some health challenges. Let's call them health challenges. I hadn't been diagnosed with anything. However, my wife and I, there was just something off. Something was not quite right. My energy levels weren't where they should be, different things like that. So something was going on, but we had no idea what at the time. 2012, I understood life insurance and I said, wow, I'm going to apply for more life insurance because, wow, this is a really cool thing. I went and applied, and the insurance company came back and said, hey, based on your blood numbers, something's wrong. And again, we had no diagnosis, but they said something is off with your blood. We drew, they drew blood and urine. There's something off in my blood. So they said, we won't offer you insurance right now, but once your blood numbers come back up to normal, then we're happy to offer it again. And that same insurance company happened to be the company that I had my convertible term with. So I said, okay, that's fine. Thank you for your consideration. And I got this ace in my back pocket. I want to now take advantage of the conversion option. And they said, no problem. Okay. Again, it's in the contract. They have no problem with you converting, even though they weren't at the time, weren't willing to offer me new coverage. So I was able to convert that policy. I was able to structure it as a wealth maximization account or an infinite banking policy where you can structure the policy to build the equity, and then we can use that as a personal banking system down the road. Uh, and so I do have that policy. However, I'm still grossly underinsured. And up to this day, I still can't get insurance because it wasn't long after that. It was actually in 2013. I actually did have a diagnosis of aplastic anemia and then a cancer diagnosis. And so a bone marrow cancer diagnosis, myelodysplastic syndrome, which is a form of leukemia. So the insurance company was onto something when they said, "Hey, something's off in your blood numbers." It certainly was, but we didn't have any idea at the time. Uh, so now I still can't get insurance. Thank thank the dear Lord that I do have that, or that I did have that convertible policy in place. But if I had maxed out my insurance when I had the opportunity to, I wouldn't have been, and I wouldn't still be grossly underinsured. Unfortunately, I am. Now, that doesn't mean I haven't been able to take advantage of the concept of structuring these policies and owning policies, multiple policies, um, because I have insurable interest in other people, aka my wife. So we've been able to take multiple policies on my wife. Her health, she's had impeccable health the entire time, so we have taken multiple policies on her. And also, we were able to take policies on our kids that my wife and I own and control. So we haven't transferred those to the kids yet, although we may, and our intention is to at some point in the future. Uh, anyway, going back to my policy. So from a personal standpoint, when I went through cancer, and I'll talk about that on another podcast or another conversation. When I went through cancer and spent some time in the hospital, I had a bone marrow transplant in 2014. So I spent a number of weeks in the hospital, over a month. One thing that kept running through my mind as I'm staring at my family at the bottom of my hospital bed was how could I have not fully insured myself when I had the chance? So from a personal standpoint, and going back to that, and what would their life look like? Because I did only have a small policy at that point in time. What would their life look like? Heaven forbid I don't come out of the hospital. And actually a high probability that I wouldn't come out of the hospital, truth be known, because of the bone marrow transplant and all the complications that go along with that. Needless to say, that was a tremendous stress for myself. It was also a tremendous stress for my wife. If I had been fully insured at that point in time, then even if the family would have been emotionally devastated, then they wouldn't have been financially devastated. Heaven forbid I didn't come out of the hospital at that point in time. So from a personal standpoint, please fully insure your life. It's the most valuable asset you have, and it will always be your most valuable asset. So insure it. Make sure it's protected, not just for you, but for your family as well, and for the legacy that you can and will leave. It isn't about, you know, the peace of mind that your family will have by knowing that they're not going to be financially devastated if you don't come home. Uh, is well worth the premium that you pay, even for a term policy, even for a whole life policy, like whatever type of policy you can get, just get something in place and max insure your life because it's the most valuable asset you will ever have. So please max insure it. If you don't get it from me, I would love to work with you, but if you don't get it from me, get it somewhere, please. So I'm going to sign off. Thank you for watching. Hope this has been beneficial and useful. Please like and subscribe. Sure appreciate you. And do have some links below where you can go into Paradigm Life, which is the company that I represent and work with. You can go on there, and we've got a lot more information on our website. And you can sign up to meet with me if you'd like to. Thank you for now. Bye now.